Hey everyone, welcome back to the channel. Today, a little bit different. Wanted to touch on just kind of the first step of a series that I'll probably make a couple videos every here and there on is just kind of value investing basics. So value investing is a pretty big topic that was made popular mostly by, I would argue, like Warren Buffett in modern era, and then Benjamin Graham before him, who was kind of his Warren Buffett's mentor. But some of the big things they really look at is ROE and kind of comparing that to a peer group. And then not only ROE, but also, there's some other ratios like price to book, EPS, how much debt a company has, things like that. But I figured I'd kick this off the first video and we would look at the ROE of FAANGs. So FAANG is a super popular kind of core group of companies that people talk about. So Facebook, Apple, Amazon, Netflix, and Google. So I'll walk you through how to really calculate the ROE of any company from scratch. Super simple. First thing, right, company and ticker. And the first thing we're looking at is shareholders equity. So for these numbers, you want to pull the quarterly numbers for shareholders equity. The reason for this being is, as you can see, it slightly fluctuates every quarter. And shareholders equity, when you pull it off a financial statement, it's coming from the balance sheet, which is a snapshot in time. So we need to, well, we're ultimately going to need the average of the trailing 12 months that they have reported. So what I'll do is I'll show you just for Amazon. Actually, let's do, I think, where's a good one? We'll just work through Apple, actually. So more search options in case you're not familiar, sec.gov. You're gonna hit more search options from the top right, and then go ahead and type in stock ticker. And then what we'll do is we'll do 10Q, and you'll see they've filed their most recent 10Q already for 2021, but we can see right 3 months ended. And then we'll take net income, which is 23,630, which is going to be in the table below. And then up in this table above for shareholder equity, you'll just come down to the balance sheet and we'll find shareholders equity, total shareholders equity, 69,178. Now, shareholders equity, easy, you can just pull off the last filings, including the 10K. When it comes to pulling net income, it gets a little tricky, and I'll show you why that is. So if we go to, and every company will have it a little bit different, but if we go to their most recent 10K, this is going to be for June 30th, I believe, because they're on a funny fiscal calendar. But if we go to the financial statements, and if we look, they're just reporting the year ended. And actually, this is, do I have this right? September, sorry, not June. So September 30, you'll see the net income report is 57, but this is for the full year. And so they don't give us the quarterly amount, which is what we really need here. So what you'll do is you'll take this 57,411. So if we look at my formula here, you'll see 57,411. And then what you're going to need to do is you're going to need to pull up the 10Q immediately preceding this 10K. So this 10K was filed 10/30. So we want their 10Q that was filed right before 10/30, so that'd be the 7/31. And if we open this, what we'll see if we scroll down to here, we'll look at net income, and you'll see they have 3 months ended and 9 months ended. So 9 months ended is just the first 3 quarters of the year. We'll see it says 44,738. So then if we come back to this formula here, 57,411 minus 44,738, so we're doing the full year amount of net income less 9 months from the previous quarter, and that'll get you the actual Q4 net income. So easy enough. It takes a little bit of time to fill this out, but once you filled it out, right, if you want to update this model on a quarterly basis, super easy. You just open each filing, input the numbers, not bad at all. After we do that, you're going to calculate the average shareholder equity. So you'll see this is just a formula, average of these. And then you're going to do trailing 12 months net income. So that's what TTM stands for. It's just the trailing 12 months. So right here, trailing 12 months. And the reason we do it this way by quarter is it allows you to calculate ROE at any point in time after a 10K or a 10Q is filed. If you only did it with annual numbers, then, I mean, you would still have to go pull the shareholders' equity to get the average. But the other aspect is you would only have at that snapshot that, year-end revenue or net income, sorry. So by doing it this way, you can calculate ROE after any quarter because your model will be built up. So trailing 12 months, you'll see it's just the sum. And then you'll see on Amazon, it's just summing those ones because their Q1 results haven't came out yet, or whatever quarter it is, their March 31st results haven't came out yet. And then from here, ROE is pretty simple. It's just trailing 12 months net income divided by the average shareholder equity. And, we can kind of see the range here. And, Facebook, Amazon, Netflix, all very similar. Google a bit lower, and then Apple a bit higher. So pretty interesting, but I would say these ones are all kind of in the kind of same core peer group, pretty close ROEs, return on equity. Apple obviously is an outlier here, and what I think's interesting here is I think if you look at like the Berkshire portfolio, let's see, does this actually list their current holdings? It does, and we can kind of look at, is this their current holdings? I guess so. Yeah. So we can see, right, like, do they have Facebook? Um, no Facebook on here. Apple, right, you can see 121 holding. They have 907 million shares. Wow. $121 billion stake in Apple. That's crazy. So, right, they have a huge stake in Apple. It's probably the largest position in this entire portfolio, right? And almost half their portfolio. And, from investing standpoint, from value investing, what Berkshire's known for, right? This does have the highest ROE, and it's probably higher than most companies. So that kind of makes sense. If we look at other ones, Amazon, okay, $1.8 billion share. Like that's not massive, but definitely on the smaller side for Berkshire. And then do they even have a Netflix or Google? No Netflix, no Google. So, right, I mean, I think this kind of shows from a value investing standpoint, right, like the 111% ROE is very impressive, I think. And, so much that I'm going to guess when they got into Apple, it was probably even higher at that time because Apple has rallied pretty heavily. Um, but, I think that it's interesting to see. And you can also kind of, I think you can check, does Yahoo Finance give ROEs? Let's check. I don't know if they provide this. They provide PE and EPS. Um, profit margin, operate return on equity. So they have 82.09. Makes me wonder if this is potentially hasn't been updated for Q1. I think their Q1 actually came out recently, or whatever quarter this is, right? When did this 10Q come out? 429. So yeah, I mean, it literally came out today. So I'd guess that this is probably based on their prior operating metrics. So you can always, check these things in comparison to Yahoo Finance and know that they do kind of somehow, they could potentially calculate these a little bit different. But anyways, I thought that this would just be a good first kind of kickoff to value investing basics and ROE, and something as you're doing due diligence, definitely look at it. It's not going to be very meaningful for probably high growth companies in all actuality, but for more established blue chip companies, it's definitely a really good metric to look at.